Traders, Anthony here. I'm looking at XAG silver. Okay, this price action, you want to be really careful up here at the moment. There's a few things about this chart. Let me just go out of here and we'll look at it from the daily perspective to start with, and then we'll come back to this. Look at this pullback, and the other thing I want to do is grab this move here, measured move. Right, there it is here, there it is here, there it is here, here. So I guess what I'm getting at is don't underestimate this thing or the volatility. So we're looking at this measured move even from this side here, bullish, and the bearish, the pullback here. Okay, this move occurs time and time again, the range that I'm talking about. So if that's the case, I would expect more of the same. There's something with the algorithm that's causing this thing to push through this, move through this range here. And if that's the case, then a move down into this Fibonacci, and also here's the thing too, on the daily, Fibonacci low to high. See, this is discounted under the 50. So if smart money is really looking to load up, I think that's more likely where they're going to be potentially aiming to fill up. But then again, you know, they are engineering liquidity above and below this range here, and that could be, so they've already tapped down into these lows. So, I mean, that could do it for them. But the other thing that you want to be mindful of is, see these two thin candles here? Imbalance. There's nothing left and right of it. This is a bullish imbalance here and here. So we've got this daily imbalance for the whole range, or you could call it a liquidity void if you like, on the 4-hour time frame. So we've got this liquidity void all through these two shaded boxes. Now the market is looking for two things. One, it needs liquidity. It's hunting liquidity, and it looks to rebalance. So it wouldn't surprise me that we see this thing hit these levels before we see it push off any further. Now, my rule of thumb is, if I'm going to be looking for a buy opportunity in any with any instrument, in any currency pair, it doesn't matter what it is, I'm going to be looking at these price swings. And you're going to go low to high, and 50% of that swing is what I've got marked up here. This is my threshold. I need to see price move down through this 50 before I get involved. Whoops, hang on. I know a couple of you might be looking to buy at this level. Okay, somebody's already talked to me about going long silver. And I wouldn't be looking to buy at this level, guys. Okay, it's at a premium currently. Now, if it happens to roll over here and continue on, I'm happy to let it go. I'd rather not get involved. I guess that's what I'm saying. For me to get involved, it's got to drop back down into these levels here. Now, you could do two things. One, you could speculate and go for the 50 to the 61.8 fib and set up a limit buy. My stop loss would go under the imbalance, and then I'd go a minimum 2R. Well, what have we got here? That's a 2. Perfect. 2R brings you to these highs here. There's stops resting above here, and that's a valid target right there. This is called that resistance. In other words, we have buy stops sitting above this level. So I'll do that. 2R, more or less, there it is. Stop below the this imbalance here. That's speculation. And there's a higher risk involved in this. Now that's just a set and forget. If the stop gets taken out, so be it. And otherwise, you know, we are good to go. So that's that. Now the other way to get involved with this is obviously, if you're in front of the chart, see, you want to map out this area down here and call it a buy zone. So let's just do that here. I'll just call that my buy zone. I might even have it. Hang on, bear with me. And then you want to wait for entry. Entry zone, there you go. I've got it, all right. There it is, entry zone, buy zone, that'll do. You know what it is. So you want to see price move into this, this level here, and if you're in front of the chart, you could watch this into the London Open or the New York Open, come down to a 15-minute chart, and look, my strategy, it's the same thing repeated over and over and over again. It works. I'm building accounts with it. I trade successfully, and I'm always looking for the same thing. 15-minute chart, it trades down into the zone. It could be here or it could be further down, but wherever you see this start ranging, okay, that's generally where smart money's building their orders, right? And then for a buy, I want to see something like that. The range, okay. Shift in the trend, or shift in the structure, change of character. Break of market structure. It's a repetition of what I do day in, day out. This is it. Break of market structure. The range, okay. Fake out, shake out, they hit stops, pull back into the high of the range, and a potential buy would be here. All right, so this one is speculation. I'll just move that to the side. Higher risk, and this one, I mean, this could be into the London Open or it could be into the New York Open, whatever. If this shapes up, this price action shapes up, well, we've got higher highs, higher lows kicking in, and that would be my entry point once we see this range starting to move, right? So that's my take on XAG, guys. A couple of ideas there. One, to speculate, and the other one is to wait if you're in front of the chart for this to shape up. And I mean, it could happen here, could happen down in here. Who knows, right? But wherever it lands, it's going to do that. And then the volatility is going to kick in, and then we see it move off again. So that's my take on XAG at the moment. And with that, I hope you have a great day. Safe trading, and we'll see you in the next one.